Joining me now is Anderson Capital Management's Chief Investment Officer, Peter Anderson. Peter, great to have you. Thanks so much for being here. Your reaction to what you just heard, 4% second half of the year in terms of economic growth is what Hassett is predicting.
Maria, good morning. As a portfolio manager, I have to personally tell you that I have never been this optimistic in capital markets, especially United States capital markets, in some time. So I'm not at all surprised that he has that kind of outlook, because it does really dovetail quite nicely with my own outlook. I think the main thing that has been happening, if you take a step back and we look at AI and all the competing technologies, you recall at first when AI was announced, there was a lot of disruption and people were trying to figure out how will these other sectors work in concert with AI, and some of them traded off sharply. But now what I'm sensing is all these competing elements are no longer competing. They're kind of coalescing into a unified outlook that most technology will actually work together rather than compete.
Yeah, really amazing when you see how it's playing out in terms of earnings. And you've got to attribute some of that to the big, beautiful bill and the legislation on tax changes that the president pushed and signed into law last year. But I want to get your take on how this administration is monetizing the balance sheet. I mean, the Financial Times this morning is reporting that OpenAI has proposed giving the Trump administration a 5% stake in the company. You'll remember that the administration and government took a 10% stake in Intel last August. That stock is up 495% since that investment was made, which was August of 2025. That stock has done incredibly well. Now, the headline from the FT is that OpenAI has proposed giving the U.S. government a 5% equity stake, part of the broader discussions with the administration over AI policy and the public's role in benefiting from AI. Your reaction?
Fantastic news. I think that it only bolsters our thesis that AI is here to stay and will contribute dramatically to almost every industry, you know, from the hairdresser to the surgeon. And remember, he is also making other public statements and commitments to quantum computing, which is in its, not infancy, but maybe a third inning of 9 innings. And I think that's a tremendous statement from our administration that we value innovation above everything else. And we're seeing that with quantum computing and also artificial intelligence. You know, there will be some naysayers that say, does this interfere policy-wise? But on the fringe, I do think it is a great vote of confidence by this administration that we are innovators, we're here to stay, and we want to lead the world in innovation.
Yeah. I mean, look, this move appears to be aimed at easing political pressure over AI's concentration of wealth, and it would represent an unprecedented relationship with the government owning this. By the way, at OpenAI's latest valuation, which is around $852 billion, a 5% stake would represent more than $40 billion for this administration, this government, to take that stake. So we'll be watching how that plays out. Again, the Financial Times reporting this morning. Want to take a look at this first half of the year, which has been hotter than hot. I mean, Dow Industrials up 8%, S&P up 8.5%, NASDAQ up 11% in the first half. As we watch interest rates rise this morning, the 10-year yield is up 1.7 basis points. We're waiting on the June jobs report out this morning. It's out at 8:30 a.m. Eastern. The expectations call for 110,000 jobs created for the month. The unemployment rate expected to hold steady at 4.3%. Your thoughts on these numbers that we're waiting on? Will they have an impact? You're expecting market impact here. And what is your reaction to what we've seen in the first half of the year?
Fantastic first half of the year. Of course, we had a tremendous recovery ourselves. And I think while a lot of investors were ahead based just on investing in the index, I think this second half is going to be more dependent on individual stocks, which ones are valued appropriately and avoid the ones that are overvalued. With regards to the economic outlook, I think what even dwarfs today's employment number is Kevin Warsh's appointment. I'm very, very supportive of that. I think that he is going to change the policies, frankly, the communication policies of the way the Fed interacts, which can only help our capital markets. I think for years they have been over-communicating, not singing from the same hymnal, so to speak, and I think he's really going to rein in that public communications. And lastly, I was very amused that he was the only one that didn't participate in the so-called dot plot, which tells us that he's thinking that might not be very helpful. In fact, it might just contribute to the confusion that investors are trying to make a picture of what the path of interest rates are.
All right, we will leave it there. Peter, great to have you this morning. Thank you. Happy 4th of July. Peter Anderson. We'll see you soon. Thank you. We'll be right back.